Elizabeth celebrating her 60th year on the throne in England. All of England is shut down. London is celebrating today, and at least one European capital is in a celebratory mood because it is not so hot in the rest of Europe today. I'll tell you that right now, folks. Morning, welcome to the Markets Hub. I am Paul Vigna, joined today Matt Phillips, because we are talking about bond yields. We're talking about Spain. Spanish bond minister today, budget minister today, came out with what sounds like a very stark warning. Matt Phillips is going to break it down for us.
Yeah, essentially.
You know, it's weird because this is at the top of the homepage. Did not get a lot of play in the markets.
It doesn't seem to be.
But what they've said today is very it's scary.
Essentially, yeah, he said that the European Union needs to step up their support to Spain because Spain has to step up its support to their banking system.
Well, and because he said that we are being shut out of the capital markets. He said we are having trouble accessing the capital markets. Spanish bond yields are around 6.5%, around 6.4 right now. Actually, they've actually come down a little off the statement.
That's kind of interesting.
That's what's so weird about all this, is that this seems like a rather dire thing to be coming out of a country that is in the crosshairs of the European debt crisis.
I mean, one thing that we've talked about downstairs a little bit is the fact that it seems that various players in the market are kind of positioning themselves for some sort of eventual bailout, be it of the financial system, which seems to be widely expected in Spain, but then also something for the sovereign itself. So that seems to be sort of why we're not seeing more of a sharper sell-off. The market has seen this movie several times, you know, since 2009, basically.
Yes.
And if it looks something like Ireland, you know, basically you can take a look at the CDS markets and see that the risks inherent in the Spanish banks are not going up that much, which indicates that people expect the banks, at least at the top levels of the capital structure, to get bailed out.
But this is extraordinary to me because Greece, Ireland, Portugal, they all went through this dance. We know that. Much smaller economies than Spain, much smaller nations than Spain. I mean, if the Spanish budget minister is coming out and saying we're having trouble accessing capital markets, if he's saying that on record, how much worse is the reality of it? Because you know they don't give the market the full bore what's going on. They try to ease them into it.
Right. Well, I mean, it's not a huge secret, right? I mean, they've had their bond yields rise pretty sharply, although they've kind of been slightly tapering off recently. And what that means is essentially the market views Spain as a bigger risk, you know. So we have seen the market sentiment shift from Greece to Spain over recent weeks, kind of set off by Spain's bailout of Bankia, basically, which was much bigger than expected and raised questions about, can Spain actually afford to pay for these?
Can Spain afford the bailouts? Will Spain need a bailout? We have a quote. One of the quotes in the story today is very interesting. We're going to pull this up so you can see this one, where the budget minister, he said, Spain can't really be bailed out from a technical point of view. I mean, you know, it's nice that he says from a technical point of view, but I mean, that is something people have been talking about in the market for a long time. Spain can't be bailed out. Maybe they can bail out the banks. If the Europeans all get together, maybe the banks can be bailed out. Spain can't be bailed out. Spain is a nation that is in trouble right now. But again, Matt Phillips, no response. You know, you had this G7.
You say it like it's my fault. I didn't do anything.
No, it's not your fault. You know, but I mean, you know, you had this G7 meeting this morning, right? Which the G7, the finance ministers, they were quick to say, it's a regularly scheduled meeting. We have these teleconference calls all the time.
Yeah.
No cause for alarm.
Right.
But the market's reading bailout into it.
Right. And the market is doing fairly well today. We even got a little bump recently because we got some decent economic numbers in the U.S. on the ISM services data. So the market, again, they've been conditioned over recent years to expect that things get worse until the government announces something, and that then there's a little bit of a relief rally. So it seems like the market is sort of not getting itself into quite the tizzy it has in similar situations, even though Spain is on a scale
I'll tell you that,
bigger than we've seen.
I wrote this in a post. I'm going to keep saying this. The guns of August. This idea is, everyone pick up the guns of August. This idea that it can't happen is almost good enough reason that it will happen. You can't think like this I could go on for much longer about that. Listen, we're going to go to break here. We're going to go back to the Queen for a second. We might as well leave this on a happy note, right, Matt Phillips? Thank you very much, sir. Where is the Queen? Where is she? That's not the Queen, but you know, that is a live shot of Buckingham Palace. You can see there, they're getting a big celebration over in Jeannie Eaglesham. We should just talk about, you know, when Jeannie comes on, we should just talk about this because we Americans, we don't really understand what's going on at all.
It looks like some vigorous hurrah.